Hello and welcome to this week's Market Minute. This is Darren Cohen with Wealth E&P. 2 months into the year, fresh off our economic updates in Florida, Cartersville, and Alpharetta last week. So I'll give you a little summary of some of the things we talked about last week. First and foremost, let's take a look at what the market has done so far this year. Everybody or a lot of people are a little uncomfortable because there's been some volatility. However, it is not surprising. Last year, we said there were probably going to be some volatility after the election just as we get through a period of uncertainty. We also shared that at our economic dinners. So the volatility this week and the downturns, not at all surprising. And that said, let's take a look at some good news. While we've had a downturn in the last week, the market, S&P 500, is only down 1% year to date. Really not much at all. And if we look at a 1-year segment over the last year, it's still up over 13%. Very solid returns. And again, this is not a surprise. We expect that we'll get through this period of uncertainty and eventually come out the other side in a real economic boom driven by large-scale innovation and corporate profits. So I want to take a look at what we call the sweet spot, which is the sort of the joining of three things in economic data. First of all, we want inflation to be in check in about a 3% range. We want unemployment to be in check in the 3 to 5% range. And we want GDP or gross domestic product growth to be in the 2 to 3% range. What you see here is the data for 2024 last year. And a lot of people have asked us, why did the market do well last year when everybody expected a downturn or a recession? Here's why. Economic data in check. We were inflation in check, interest rates in check, GDP growth, and unemployment, all really solid in the ranges we want to see them. So the really important question is, what do we forecast for this year, 2025? Much the same. We expect inflation to stay in the 3 to 4% range. We expect unemployment to remain in the 4 to 5% range. We expect GDP growth, 2 to 3%. And to combine all that and put it all together, we expect corporate earnings to continue to grow at about a 15 to 16% clip like it did last year. Again, not surprised to see some short-term volatility. That is normal in any year, even in really strong bull years where the stock market has a really strong finish. Sometime during the year, the stock market is traditionally down 5 to 15%. So while it is a little uncomfortable, we would recommend you take a deep breath, trust that it will sort itself out, know that this is not a surprise, and we will come out strong on the other side more than likely. Let us know if you have any questions. Check out the website, wealthep.com. We'll see you next time. Thank you very much.